All right, everybody. Welcome to week one, session two of the Altcoin Mastery Market Mastery series with Trader Troy and myself, Trader Dax. So yeah, week one was obviously really good. Week one, session one was obviously really good. Great feedback from everybody, and it was awesome to see everybody doing their homework and posting up in the Discord group. Really excited to take you guys through week one, session two, which is going to be focused more on basic pattern formations and how to trade those. Although, basic patterns and things like that are super basic level form of technical analysis. I think it's really important for everybody to be able to trade these pretty effectively. And I also believe, especially when the markets are quite bullish, which, if we do follow the standard Bitcoin market cycle, after this year, we probably will have about 3 more years of bullish momentum. I personally believe that understanding and knowing how to play bull flags quite effectively is probably going to be one of the most profitable patterns that you trade, especially in cryptocurrency markets. And, on altcoins as well, when you're in altcoin season, they seem to pump very hard and they just pump and go into bull flag and pump again. So spend a bit of time going over those other formations. We're going to go through supply and demand zones, a little bit on institutional order blocks as well. And then we're also going to go and take a look at trading support and resistance flips, and then also trading the general pattern failure, which is pretty important as well. All right, so before we should just get into everything right now. All right, so first step is basic patterns, and I'll just expand this picture so we can see. So basic patterns are, all your pretty standard stuff like your head and shoulders pattern, your rectangles, channels, bull flags, bear flags obviously as well, pennants, symmetrical triangles, and triangles, the list goes on, right? And basically all these are, we went through trend lines a little bit last session, and basically trend lines, when you have diverging trend lines, or they're going in different directions and everything like that, sometimes they start to make small pitches, right? And we can start to create a narrative out of those. Now, typically all this is the market doing something like making higher highs and lower highs, or, in the case of the head and shoulders, it's a reversal pattern because you're making a higher high and a higher low, right? And then we actually flip the trend, and then now we're making a lower or even low, which forms a neckline, and then we're making a lower high, right? And then from that, then we break through our low down here, and we actually make a new low, right? And when we make that new low is when we actually flip the trend, right? So that's why, for example, a head and shoulders pattern, it's just a very basic way of looking at the market structure and being like, okay, the trend is flipped because we were going an upwards trend and now we're going a downwards trend. And it's basically just the pattern. And it's important to understand the reason why these patterns form. And it's more than just, okay, this is a bullish pattern, or this is a head and shoulders, or this is a double top. Like, they actually form for reasons apart from the little picture that they create, right? And the reason is because the market is either bearish or bullish, right? And so it's important to understand that there's actual real market structure going on behind these. It's not just, the basics of, okay, this is what it looks like, and it's creating that picture. So learn and understand the underlying meaning behind these patterns, and not just look at it and be like, oh yeah, that's a cup and handle or inverse cup and handle or something like that. Understand the reason why the market might be turning in a certain direction, I think, is really important. Because, for example, sometimes the head and shoulders might not actually be there really because it's not really the right structure. But the underlying market structure is there of, we were in an uptrend making higher highs, now we're making lower highs. And if we break that and make a lower low again here, then the market is actually shifted in a new direction, right? It's important to understand the underlying meaning of that. And same things with, triple tops, triple bottoms and stuff like that, double tops and double bottoms. We're going to go through that as well. So first off, we'll take a look at double tops and double bottoms, and we're going to take a look at a couple of those in the market as well. So double tops, obviously, we were looking at horizontal levels in the last session, right, on Tuesday. And so obviously now we're looking at how we can form those into a bit more market structure, right, to give us more trade setup. So we have a horizontal level up here, right, and the market comes quite aggressively into that level, bounces off it, and then it creates another horizontal level, which is the bottom of our neckline of the double top, right? So how you can play this to play the trade on this, when it comes back into the first top, which is obviously going to be at a horizontal level as well, right? And it tags that level, especially if we've got an order block here or something like that, or some other market structure, for example, that's going to give more confluence. You know, you might have a Fibonacci level through there, or maybe like a really strong moving average or something like that. You know, maybe a pivot, for example, right? And so we might come into that area and then gets rejected again. So that can be your first entry into a trade. And then the second entry into your trade can be when it breaks the neckline. So if you enter over 2 entries on these, it's going to help you get a better average, and it's going to stop you basically looking to sell down here, because we want to be selling mainly up here. We don't want to be selling at the, this is the first trouble area, right? So we can call that FTA, right? So if we're selling a rejection up here of, you know, this might be a neckline of something else, for example, or, you know, order block. So if we're selling the first area of the second top, all right, then we don't want to be looking to sell again here at the neckline, right? Because that's a much better spot to be actually buying, right? And a lot of the times when we come back down here, this might bounce again here. So you're much better off averaging in over 2 entries, so this level here or this level here, and not be buying in only at this level here, because if you're buying in trying to catch the breakout, it's a really good way to get wrecked, because this can leave you open to a swing failure pattern or something like that. Basically come down, wick down, you enter here thinking it's going to new lows, and it comes back up, closes inside here, and then you're forced to buy back into your trade to close it out, and you're helping push up the people who got into the swing failure pattern underneath the support, right? So just be aware of that and how to play these. Obviously, you know, as you get deeper into the course, you'll understand positioning, everything like that a little bit better, but the basics are, you know, when you come up to the second top, you sell here, and then you can also sell here again if you want to add to your position. What that will do is average you down, and so your average entry will be here. So if it does fake out and come back in, you can stop out at break even or just a small loss. All right, so double tops is how they sort of look on the chart. Double bottoms are very similar, right? So we'll take a quick look at double bottom here. Obviously, this is your first bottom that puts in the support, right? And then we have our second bottom down here, right? And this obviously is where the automatic rally happens and pushes into the top, right? Which creates the resistance. And this also looks like it's setting up a bit of a trading range as well. So just be aware that the trading range, generally where you have this resistance level that comes up to and tags that area, is going to be a previous support level, which is created by this downtrend here. So we can see this is a previous support, right? When we get underneath that support, it flips into resistance. So when we have the automatic rally off this neckline here, it bounces back and tags this resistance level, right? So we get rejected from that level there, and we come back for our second bottom. When you see these two close at the same level, and we usually get a nice rally off there. When we break through the resistance level, right, which is created by this area here, which is our previous support, term resistance, when we break through this area here, you don't want to be buying the breakout, right, unless you've already bought down through here, because it's going to give you a better position and average out through around this level here, right? The better place to actually buy in is when it comes back for the bullish retest. So typically whenever you have a breakout of any of these patterns, a lot of time what will happen is you'll have either an immediate retest, will come back and tag the level of the breakout point and take off, or you'll get a rounded retest, so it'll come back and there'll be a little bit of space and time. It could be, you know, on an hourly chart, for example, it could be like 4 to 5 hours, comes back, retags that level, and that's a much better entry than trying to buy this breakout here. Don't get caught trying to buy breakouts, the upside or the downside. You know, you're much better off just leaving it and waiting to catch the retrace. And yeah, that's why I always say don't chase retrace. You want to catch the retraces. So this is a bullish retest. And same on this one here, you want to be waiting, even if this doesn't come back, right? You're much better off waiting for this to come back and take the entry here, or if you haven't got an entry up here, right? So important to know. All right, so let's go take a quick look in the charts. Let's go Bitcoin. Having a little breakout here at the moment, actually, which is pretty nice. We'll run over that shortly, but if you remember from the last session, we were talking about going into long positions based off pin bars. So we've got a really nice 4-hour pin here. This is another one here, which is looking pretty good. And on lower time frames, it's sort of starting to create that falling wedge pattern. We're just getting a break out of that now. So could be on for a reversal soon. There's also some pretty nice bullish divergence through here as well on the 1 hour and 30 minute also. You know, the other thing as well to take notice of is there's actually a really big bullish divergence here on the daily, right? But it's only going to kick in once this flips above 7,470, once this goes green. All right, so let's go and take a look at this double bottom. So we've got a really nice clean one here on the daily for Bitcoin. So this is our double bottom, came down, tagged this area here. As you can see, we've got a nice pin bar in there. Then we've got another nice pin bar in there as well. So if you can take the long base off those, obviously there's this double bottom in here as well. I'm going to go and check it out on the 4 hour now because I think it's a little bit better to look at. I like looking at the market on the 4 hour a lot anyway. But this is sort of the neckline through here, which is also a really interesting level, right? And so obviously this is what's called an Adam and Eve double bottom. And so we have this Adam shape, which is the V action, and then we have this rounded Eve sort of bottom, right? I really like trading these. They do pop up in the market a lot, especially in crypto. They pop up a lot in Forex as well, actually. But I think this is probably one of the most common double bottoms you're going to see, and they occur a lot. So learn this structure. Sometimes they go the other way and you get the Eve here and the Adam here, but typically they go the Adam, which is the V-shaped bottom first, and then we have the Eve sort of form after that, right? So not to mention there's also a really key level in here, which I'm going to show you because we're going to go through that a little bit today. Right, so this is, okay, so this is what's called an order block, right? So it's pretty important to understand how to draw these in. Don't worry about it too much right now because we can go into those shortly. But it's just a key area in the market of support and resistance. And all I'm doing is taking basically this doji top here and the bottom of the market structure in this level here, right? Okay, so we're going to go into our 4 hours, right? And as we can see, the market in our double bottom comes down perfectly into this level here. So, right, this for me was a really obvious long entry because not only did we have the double bottom shape through here, I think there's also some divergences in. This one had a 4 hour divergence. I don't think this one had any divergence. Obviously because it's not lower, but and it sort of had a bit of an uptrend in here. But we can see that we're bouncing off the inside of our order block through here, and obviously came back up here. This is also a miniature version of the double bottom as well, right? So this is sort of your neckline, right? Previous resistance over here. Here's your neckline, double bottom, and then obviously we break up. So how you measure these? So we'll do the small one first, would be from the neckline up to the resistance point. So this is basically like your small version of the double bottom, right? And then obviously that takes off. And then this is your other one. So basically we'll go from the neckline up to the resistance level. And then that is your measured move target. Fell a little bit short, not too far, but only just. A couple of centimeters, so not too bad. But typically you don't want to rely only on measured moves. I like to use a Fibonacci target to take most of my targets, or go off previous market structure. So we can go Fibonacci levels. This is our 0.618. So that's a nice sort of target from that one in there. But basically, you know, like we were saying before, instead of buying the breakout through here, we want to be getting in this area here. So this is a really nice trade, actually, and I had about 30% you could easily take out of that. So, you know, obviously on cross, it's about 3,000. So yeah, really, really nice market structure to know and understand. Obviously, we've got one that popped up on Bitcoin, and this took a long time to unfold, about 20 days. So pretty easy to spot this one when they're taking this long to unfold. And yeah, I believe that everybody should be realistically, you should be able to catch trades like this and be profitable off them. because they're just so easy to make money from. They're very obvious, and they take a while to turn. And yeah, you should be able to take some good money out of those ones. Okay, so let's keep moving. Triple bottoms are the same. Obviously, you get rejected at the neckline one more time. It comes back down. It tags the lows again. This is almost like creating a bit of a trading range as well. And when we go into wick off, we'll go over these a little bit more. But basically, they're just a trading range. It goes sideways. You can have 3 lows, 4 lows, and getting rejected at the neckline. Right, so you can either be longing from the lows and selling at the tops, right? If this gets rejected, if you're thinking this is double bottom, it gets rejected, you sell this on the way back down. This is why it's important to be getting at the lows for a long entry, because you're closer to your invalidation point, right? So you remember how in the last webinar we were talking about when you're entering the market, you want to get in as close to invalidation as possible. If you're trying to buy a breakout out here, where's the invalidation point? Maybe below this low here, but it's not really that good because it's easily just come back down, tag the low, the trading range again, and then you get stopped out. You take a loss and then it bounces off this level again. You probably won't get in again another time because you're like, oh, I just took a loss on this exact same trade. I'm going to take it, and then you try and buy the breakout again because you took a loss back here. You didn't take the trade at the bottom of the trading range, and now you're trying to buy the breakout out here, and you get swing failure pattern, you get wrecked again, right? So it's just not the sort of habits we want to get into. We want to be buying at support. We want to be selling at resistance. Right, and then if we do want to be buying up at this level up here, at the resistance level, what we want to do is we want to wait for the breakout, and wait for it to come back for the bullish retest before it takes off in the uptrend. All right, so yeah, let's take a look at inverse head and shoulders, because I think this is a really important pattern. Somebody I work with in finance is a very, very good trader. I've seen him make $150,000 in 30 minutes on a trade. He trades very big size, mainly trades the stock market, indexes, and sometimes some commodities as well. But he mainly trades indexes. And yeah, he's been trading for 17 years or something like that. Prop firms in Australia as well. And yeah, he was basically telling me, is like, my secret weapon is the inverse head and shoulders. Even though it's so super basic, somebody that's been trading at his level for that long is quite a talented trader. Yeah, something so basic like inverse head and shoulders. He says it's his secret weapon. It's the number one pattern that he's made his most money from in his trading career. So yeah, this is a person that has multiple $1 million trading accounts. So yeah, not to be snubbed, that's for sure. All right, so basically the structure of these is we have a neckline that comes through, right? We have our left shoulder, which is obviously the start, and all this is we have our downtrend, right? So we can see we're making lows, making lower highs, making a new low, making a lower high, and we come down and we make sort of a big blow-off sell-off point down the bottom here, right? So then we have our head, right? Then we have the automatic rally that comes back up, right? We tag that neckline area, right, and put that in. Get rejected at resistance, we come back down, and instead of making another low and continue this downtrend, what we do is we actually make a higher low here. So we have our lowest low here, and then we have a higher low here. And then what happens is it gets this rally through here, and it breaks the neckline, right? And then typically what happens is it'll come back for a bullish retest and then take off again into a new uptrend. And now we're making a high, making a higher low, and now we're making a higher high, followed by another higher low, which usually is going to tag this level here, and then we're off into an uptrend, right? So let's take a quick look at these in market structure, right? There was a really good one last year, which was pretty juicy and nice to trade. It's going to take off some indicators here. Where is that? Here it is. All right, so this is a really nice head and shoulders. This is one of my best trades actually for 2018. Pretty easy trade. I thought it was a super obvious one. And one thing to take notice of as well is you sort of make what would be a double bottom if you didn't have this space in through here, right? So something to take notice of. So you have sort of like the head, the shoulder shape, which is obviously the left shoulder here, right? It comes down, and the point of the shoulder usually matches up with the point of the shoulder of the right side. All right, so that was a terrible even line, but it basically sort of matches up like this. You can sort of see in here, the closes are pretty similar in their price level. There's only a couple of dollars in between that, right? So something to take notice of. I noticed the head and shoulders that do play out, typically the shoulders, either there's a close that's very even or there's a wick that's very even throughout this area. But you don't want to have too much space in between these areas. Sometimes I'll even go a little block from the wick through here. So this where the wick starts from the close to the extreme, and use that as an area to be looking into getting to the right shoulder. Because sometimes the right shoulder comes down, it's a bit more shallow, sometimes it's a bit deeper, right? So if it goes deeper, you know, you can look for a swing failure pattern through there or something like that for the right shoulder. But basically, the way you want to be playing these, right, and so we see the market structure start to develop, right? And around this point here, sort of thinking, okay, this is probably going to get rejected here. If it does, it's going to come back for a sort of inverse head and shoulders shape, and I want to be getting long into the market, right? So just for educational purposes, we're going to take the replay tool. We're going to have a look at that, and it's not to impress you guys and pretend that I'm a magician calling the market, but we're using it just to show you how the market works, right? So we have our left shoulder here, we have our head here, and then we have our right shoulder coming into here, right? So you're sort of looking at it like this right now and being like, okay, if we can find a little bit of support through this range here, this is going to be a really good time to get into an entry. So I like to try and get an entry at the bottom of the right shoulder, and that is because your invalidation point is the head of the pattern, right? So if the head of the pattern gets taken out, obviously the inverse head and shoulders idea has completely been blown out of the water. Because if you come down here and then, you know, you're trying to play a double bottom or something like that, right? So then, you know, the whole theory is broken down. So your theory of what the market's going to do is invalidated. So remember, we want to be getting in as close to the invalidation point as possible, right? So if we're getting in as close to the invalidation point as possible, that's going to be through this range here, right? So basically we want to get in through this range here, and then that can allow us to buy again at the neckline here if we want to, and it's going to average up our trade average, our entry average, to about this level here. So if it does get rejected and comes back down and we end up failing, our invalidation point is here. We've got a little bit of space to get out, right? Obviously what we don't want to have happen is come back down, take out our stop loss, and then come back up here, right? And then we buy in here and then get wrecked again, right? So just be aware of that. Sometimes they do make another small shoulder like this, and something happens like that. So just be aware that they don't always break straight through, right? So if that does happen, try to avoid buying the breakout right through here, wait for it to come back, get a retest, and then your invalidation point will be underneath if it breaks back in. Because if you get above this support resistance level with a clean close, right, you don't want it coming back inside underneath and flipping back from support into resistance again, because that'll be invalidating our trade theory, right? So then obviously this starts to play out. Speed this guy up a little bit. Wow, it's really slow. Here we go. Right, and so then we have this. Well, you can see as soon as we get above the neckline, we have an instant pump. Right, so then from here to here, we're going to take our measured move. Right, so I like to take the measured move and set a target at that point. Right, but then also be aware of our Fibonacci levels as well. Right, so Fibonacci levels up here, and sometimes I might go like this. Right, and then I can maybe put one target here and one target through here, right? And if we're getting in down here, it's a really nice move. It's about 20 to 25% on that trade. So yeah, really good money. You don't need huge moves to make money, especially when you're trading on BitMEX, guys. You want to focus on getting your win rate higher, because if you're getting a win rate higher by taking profit at your first points of resistance or your earlier targets, it's going to increase your average over time, because you're much better off getting a really solid win on a 20% move or something like that off a trade like this, than getting sort of stuck waiting for it to come back and it does this or something like that, and then you taken, not as good profit off the trade that was really there. So yeah, 20% moves are massive, guys. Don't snub those off at all, especially when you're trading on BitMEX. Everything adds up, right? So the key in this game is to take profit a little bit earlier than everybody else and sort of have the theory of the hot potato, right? But we're going to go into that a little bit more. You want to get in and out of the market and take money off the other market participants quickly. All right, so let's keep moving. So that's inverse head and shoulders. Let's go and we'll take a look at some triangles. So Troy, do you want to take us through symmetrical triangles, ascending and descending triangles?
Yes, it is, man. Do you want me to take over the screen?
Yeah, I'll flick across to you.
Sweet. All right. Can you see that? That's worked?
Yep.
Sweet. All right. We'll cover symmetrical triangles, descending triangles, and ascending triangles. The easiest ones to pick have been the ones of the market 2018, which was our nice and simple descending triangle here. And we've also got our ascending triangle down here, which was also could have been a symmetrical, and I'll cover that as well. And then you've also got another simple descending triangle over here, which at first also looked like a bit of an ascending as well, because it had a bit of an upside. But we'll cover how to trade these. On the larger time frame that we're on at the moment, the 3-day time frame, you can see it just falls straight out, all right? And then straight out. There's no retest. Normally you go for the retest when you are trying to trade these. But on this time frame, you won't really see a retest. And on the scale, once price is being held for so long, there's usually quite an explosive move like this at the end of these. On this larger time frame like this, you might not get a retest, so it's a bit harder to get an entry on these. On the small time frames, we'll look into those as well. How you trade these is usually you can see order blocks once you'll cover them shortly. You've got one through here, all right, and this is what's created the bottom of our descending triangle through here. Every time it's come down, it's found support. So how you would look to trade this was, once it's come down and it's found it's a bit of reversal, you look to long this, and then based on your Fibonacci, where are we over here, the retracement tool, you'd go from pretty much the neckline of this. I'll go to this one first. This is a metric here. It also dropped down. So what I'll be looking with this descending is, once I found the bottom of this candle here, because I wouldn't have entered too quickly, we didn't know this was going to hold, right? This was completely capitulating. Once we've got this reversal candle, you'd be looking for an entry here and looking for somewhere to take profit, right? I'd be using my fibs from pretty much the neckline of this one here, coming down to this one, and then coming to, usually I take profit on the way back up, usually around the 6.8 point, so the 61.8. So it would have been around here. I would have been looking to get out of the trade after entering around here after this bullish candle. And then once it's created this second a lower high, which then creates the pattern of a descend. Once we've got this lower high, and you can then create the 2 points. So we'll just clean this chart up a wee bit, and we'll just draw from point to point through here, because that's what we've been able to work with at the time. And we know from that point onwards that this is going to act as resistance, right? Which is what we can see here. So at that point in time, once we've got this descending playing out, we now know that this order block has held true once, right? And that's became support. So when it comes through to this again, we know it's already been tested once. On this time frame, you probably get another bounce out of it as well. So you look for a reversal here. So for me personally, once I found this candle here on the 3-day, it was a bit of a reversal sign for me. If you guys remember yesterday, on Tuesday, we covered the Morningstar reversal. So that painted a nice one here in the order block for me. And that's when we, let people remember back then, we rebrought and then wrote that back up. That was on spot. We weren't leverage trading back then. And then it was a simple exit here. Once you start to get a reversal candle, a bit of rejection, you start getting a little bit of volume as well. If you want to apply volume to the triangles as well, you can see that this is a point to take profit, and it may have also been like a fib target through here. So once you start to see the reversal happening at the edge resistance, you can then look for a short entry once you've got confirmation that you've rejected the trend on the downside. And then the same applies. You'll be looking to take profit again once you get back down to the order block range. And you can see once it's already touched it twice, the bottom of the descending starts to get a bit weaker. You get less volatility to the upside because obviously it's a descending pattern and it's going to make lower highs on the way down. The other way to trade these as well, let's clean this up a little bit. On the larger time frame, saying before, you might not get a retest. But usually how these would play out is you get a bit of a fall to the downside. Once they break, they come back up for a bit of a retest before they then completely drop off. Because of the momentum behind this, after 6 months of building, the downside was pretty explosive, right? Which also coincided with a 3-day defrost, which is also a signal that market has changed trend, and that would have also worked as confluence with this large triangle breaking down. We've then got the ascending, which I'll cover this one down here. So this at first looked like a symmetrical triangle, which was pretty much like this, and that's what everyone saw. So we'll just use this rewind tool. So keep it nice and simple. This is what we all saw back at the bottom. We were all assuming it was going to make maybe a bit of a double bottom like this and come up, because usually that's how a bottom is formed. You get a bit of a V, which is the volatility. And then once the volatility dies off, you normally get a nice rounded bottom afterwards. And that's what we were expecting to happen. But as we press play on this, we can actually see that it's played out as a bit of a symmetrical triangle, which should hit resistance shortly. Yeah. I'll just pause it again. So this is our symmetrical triangle coming down. What this is also creating is that double bottom. You can see, if I just clean this up again, you've got your V here, and then you've also got the rounded shape here, right? So that's what I covered before. But we can also see that we've made a nice, clean, high low, right? So we're now in an ascending pattern. So you'd look for the ascending side, but we can also see that the candle pattern's symmetrical. So we've got both descending and ascending happening until you get to a point of volatility and one side wins. And normally get a bit of a retest too, and we'll see how this plays here. So we'll say through here will be our neckline, because we've just got the candle bodies, we've got a wick. Then just assume that that's where resistance will be if we come up, right? So once we've got the bullish reversal here, we'll be looking for maybe a retest to go long through here somewhere. Closer to the line, the better, but they got a front run quite nicely. After this candle here, it was showing that the bulls are back in control. So that would have been like a nice long entry through here. And then we just allow us to carry on playing. You all right, mate? Cool. So we can see as it comes up through here, we've got the explosive, this after the double bottom was put in. So this is the V, the U, right? Which now turned out symmetrical into more of a ascending triangle, right? So now we've got that top in, we've now moved our trend line, and that's now our trading range, right? So this is our bottom, this is the absolute bottom, this is the ascending pattern. So as long as we can hold this, this is an ascending triangle. If we fall under that, it's invalidated both triangles, but from that point on, we'll just allow that to keep playing. Because this has now come down and retested this range here, it's now confirmed a symmetrical triangle was bullish, if that makes sense. So first we want to play this triangle pattern out. So this comes down, it breaks out through the descending trend line and comes back for a retest. This is a bullish retest, all right? So this is now signaling to us that this is bullish and that we should be looking for a long if we're not already long, or adding to our long if we were long from back here somewhere, all right? Now how we'd measure these from this point as well, it's the measured move. So we'll just go from pretty much the neckline down to the bottom. And whenever we break, this would be our first point of taking profit through here. But we'd also be looking at Fibonacci as well. So we'd go from the bottom to maybe the top of our range, which is putting our take profit here. As we all know after the fact, right, we broke out and went completely spastic. But that's your safest take profit if you know and taking profit prior already. and that's the measured move target, right? So we'll just let this play out. So we now know the symmetrical is now looking to become an ascending, as long as this trend line here holds. We can also see that the double bottom that we saw has actually failed to break out. So that's also a bit of a bearish sign to watch for. All right, we'll just press play now. And as we all know how this played out, but this is the explanation of how the pattern worked. So symmetrical into an ascending, into a breakout of the measured move from here to here. And if you want a safe target, you normally go for the 61.8. So now if you see this here, the very first breakout we got ran directly to our measured move, right? And that's where the down pressure started. And then again, down pressure started here. So simple trend pattern here, created the perfect easy long here. Once you understood that the symmetrical was then becoming an ascending, and this was a nice safe long entry here. And all you had to do was, depending on how you're trading or the leverage, the rest of it, but you look to get your entry in here, and then you'd look to have your stop loss under the pattern that validated it. So you could have it under this one down here, or you'd have your stop loss down under this section here. So you don't want to get wicked out. But you can see how clean this was. It felt pretty crazy at the time. This is a lot of bar heads, if anyone remembers trading that range. But you can see just how simple this can be, right? The other part of it, I think, is just a measured move, just understanding where to draw those from. The understanding the market won't always give you the perfect measured move. So we always look to take profit a bit earlier. As Kyle just mentioned, you want to be taking profit before other people, because when that down pressure kicks in and it's a race to get out, we see this bullshit here, right? And you don't want to be the person who's trying to get this top and then ends up having to sell down here because they were too late or too scared to sell, right? You're still on the way up. You can always rebuy it once you've got a nice cleaner entry, right? Any guys you reckon you cover on the ascending or descending, Carl?
No, I think you covered it, mate. Very nice. Keep going through. We'll keep going through. Hang on a second.
Cool.
All right, what is next? Yeah, just flags and patterns. So do you want to go through just bull flags?
Bull flags, sweet as, cool. So so pretty much how bull flags and bear flags work, guys, is the trend you're in, right? So this is an uptrend, so therefore we'll be looking for bull flags on the way up, and then on the downtrend we're looking for bear flags, right? So we'll go to our current market that everyone's been watching. It's going to clean this up. Here we go. So we'll go to our current market so everyone can understand what was going on and why this sell-off happened. As you guys might have remembered on the Tuesday one, I said this might have been the Tuesday one, might have been the webinar, one of the free webinars. But I was saying that this is just a bear flag, and that if we get the retest here, then it's a very bearish sign, right? Because we've got our flagpole coming down, we've got our high, we've got a higher low, even a higher high, which then creates this pattern, all right? Which once you get the channel happening, it then also ends up looking like a head and shoulder pattern. But what that is the retest of the channel. Once that gets to the bearish retest in here, is usually a sign of death following. It's not always the case. I can show you a spot where this didn't go down and end up going back up. But that's what a bear flag here is. So I'll just clean this up and we'll start again. So you get your volatility to the downside, which is your flagpole. So this is the bear flag from here to here, right? And then once the pattern starts to play out a bit, so we'll just rewind it so you can see what's actually happening, or looking a bit scary, right? So it's come down. We've got a bottom, got a second bottom. It's made a lower low. So this is looking pretty scary, really, because the trend is still down. But we've also got a bit of an upside, right? So once this is recovered from here, I'd be saying, okay, cool. So we've got our high, we've got our lower low, but now we've got a higher high, right? So this is now turning into a potential bear flag until proven otherwise. So I'd be looking to go trend to trend, and then same again here. I'd be, as this came down, as this developed to the downside, if it goes further, I then bring this trend line down further, trying to find the channel until we had fallen further. So if we just allow a little bit of time here, we can see we've come down, right? So where we had our trend line before, you can still see it broke down and came down for that retest, failed, and then it's fallen again since, right? But until we've broken this bottom that is put in here, that bottom range, until it's broken this particular bottom range and fallen lower, you still assume that we may head up or that we may end up in a bear flag until proven otherwise, right? And you can still see here the same trend line again. It's come up again, rejected, come up, fail to stay in. You got your bit of a butt head here and you come down. But what we do now is adjust our trend line. Just make it it's a bit messy through here. We can still see got the wick here. So what I'll be doing is I'll be changing this trend line here as well. Just trying to map out this bear flag a bit better. Let's clean that up. So you've got a bit more of a channel here. A few touches through there. You can see this is the point of capitulation. So you can see that this is a strong trend line, holds relevance. And here we've got the bottom of the wick through the candles to the upside here roughly, right? So what we'd be looking at is we've now got a high, a higher low from this low, and now we've got a higher high. So this is the point where I'd start to get very bearish until proven otherwise, right? Until we break this price point, I'm very bearish because the trend is down. We're coming down, we've capitulated, it's looking pretty shit. If this trend here doesn't hold and ends up going back up again, I'd be looking for the retest for sure. So we'll just allow it to play out some more. So we've come down, right? It's failed to hold the channel. This is where bulls had to defend, and they failed to defend. This is why you can see the volatility through the downside, and then you get that retest through here. Simple trend line, right? When you get this retest in, this is what confirms the bear flag, which will then give you technically a target of maybe from here to here, pretty much from the break point, which would be roughly here somewhere to the downside, which is pretty crazy considering this is where we're at right now, and we have dropped pretty hectic overnight. So we'll just play that out a bit. So we've got our, bring this through here. Cool. Cool. So we saw the measured move before with the ascending triangle down here, and it played out the measured move perfectly through to here. We're now back in this kind of measured move where technically we should, from the point of retest usually, or the point of break, we get a measured move down, which is putting us around the 6-7 mark. There's also a heavy amount of confluence on my main chart that I put out a video today. If anyone's watched that, you would have seen why I've created this here. It actually applies to the measured move of this bear flag here, so that's quite interesting. And I've only just noticed that while doing that with you guys right now. So that's the bear flag. They can also work sideways as well. It doesn't have to be on up like that. They can just be this way, where price goes into a bit of a channel and then fails to break out and then falls down. Very similar. Here's how you want to look at it. A lot of people trade horizontals only and not the trends. I find the trend lines to be much, much better on the diagonal scale like this, because once you've got this nice clean rejection here of your trend line, that's much cleaner to me than a horizontal break, right? Because at the moment, we don't really know what price is doing. We don't know if price is going to end up just going like this and then coming back up further. What we do know is a nice clean trend line rejection. So that's why I like to use both when it comes to my bear flags. But technically, you could have used this as a horizontal bear flag as well, right? And this is the same on the way on the upside. So we go back to the rally to the upside from the bottom of our bear market all the way up. We pretty much just see Bitcoin do flag after flag. And pretty much what flag is a consolidation period after an impulse move like this. So even though this is what we'd call a rising wedge, it's still a bull flag because this is the flagpole. It's to the upside, right? So technically, this would be our point of take profit from this move, which is also where we see a bit of resistance here through here. That's not the only reason this happened, because this has obviously happened much later, but this is where the measured move was from that. We can then see another impulse move maybe through here. So this is a nice big flag here, flagpole, and you can call this an ascending triangle here, which is technically be a bull flag as well. So they don't have to have a specific look to them. It's just that they've come from the bottom up, so in an ascending pattern, and then broken out. This was very messy through here. A lot of people may remember it. A lot of volatility. A lot of people were worried that we were just going to fall again, which is another factor you've got to take into your market. So if we broke out, we definitely didn't reach the measured move. We started to get our fail swing pattern, You can see a nice big bearish candle here, a bit of a Darth Maul. Same again here. Clearly trend is broken and we're going back to the downside. But you can see that the trend line back here, the 2 points, created a support on the way up. So you could be looking to potentially long these after you see a pin bar like this. A bit of a long in. Another one over here, a bit of a reversal happening. So once you see this kind of stuff happening, you could then look for a long, because trend is now up. So you should be looking to long. You don't want to fight trend until we've proven otherwise, right? So until we had broken this low here, you should have stayed potentially bullish, right? Because that's our low. Until we made a lower low, we didn't really break trend. We're still ascending. So bull flag after bull flag in a bull market is how you pretty much print money. I'm pretty sure we'll cover on how to trade those as well. So they just happen time and time again. This is what we call another bull flag just here, another ascending pattern after a big flag pole, right? So we'll just quickly, from this one, I'd probably just come from down here to here, impulse move from here to here. I'll be looking to take profit. And what you can see is where a lot of profit taking was done. And that wasn't even a clean. Like you could hit your flag pole lower, higher. That's the subjective part of this. Because trend lines, right? Patterns, everyone has their own little opinion or view on it. There's an Adam and Eve back here. This pattern. So this is an inverse head and shoulder pattern here, which has failed and come to the downside, which has then created a broad end ascending wedge. And then this has created a ascending broad end wedge to the downside. You can see how patterns are in patterns, and all that really was just one nice big potential double bottom, and there's all these patterns within patterns. So those questions in the Q&A section about time frames and patterns and the rest of it. So here's one pattern, right? There's another pattern within this pattern that failed and broke to the downside. Then there's the broad end ascending wedge here, which failed, went to the downside, which is another one here, which failed and went to the downside. You can see how there's patterns within patterns, and that same pattern just there, which was those two broad end ascending wedges, was also just a mini head and shoulders here as well. So you see these patterns within patterns, and different time frames will hold more relevance over the lower time frames. Anything else on flags or be a flag, Scott?
No, I think I mean, we just go over some bull flags and just show where you'll put your entry stop loss and take profit.
Cool. So we'll look at the ones from our current, our previous run up, and we'll just go from there. This was a pretty disgusting shakeout. Just to find a particular one, maybe just this. This is come and collect, and I'll just remove it back to here, the price. So we can see that we've just broken above here, right? And we've also seen that we're in a bit of a bullish rally. So we've got our flagpole. We're now coming down, looking for a retest, right? So right now, we can't even see a flag is going to form here. We don't know a flag is going to form here. All we know is we're going to try and flip support into resistance, which is part of the homework you guys did on Tuesday. Which we can also see, one of the patterns that we did the homework on was the broad end ascending. So that's what we can see and work off of right now, right? If we allow a little bit of time to pass, we'll start to see we've now rejected again here, so we've now got our horizontal top. So it looks like it may become an ascending flag, or that may be a double top and we're going to head back down, right? The broadening ascending has been rejected because we've bounced heavily off it and made a higher high. So what the flagpole is no longer a bearish pattern forming. This has now been rejected, which is very bullish. And we made the higher high, which is also really bullish here for the double top. So I'd be looking for an ascending pattern to play out here. From this, what I can see here is we've got the pin bar forming on horizontal support. So I'd be connecting from here to here, right? I'd be looking to go long after the close of this, purely based on we're in a very bullish market. We've now flipped this to support after one bounce, and we're getting a nice buying pressure under here, right? And that the trend is still in and up. We've got plenty of room here before we should head up. So we'll probably see some consolidation to the upside. So what I'll be looking to do is go long in here, taking a long entry here. I'd have my stop loss underneath this, which is my invalidation level. Or if I wanted to be safer, I'd go into the next level of support down here. and then just allow this to play out. And then we'll just allow some time to pass, and we can see that the ascending is playing out. Because we're bullish, we should be bullish, right? The ascending broadening wedge here has been rejected with the higher high, so that's bullish. We've also got a bit of a double bottom forming within this, which isn't normally a continuation pattern, but it has played true here. We've got the V into the U. And then we've also had the rally to the upside. So what I'd be doing is looking for fibs. I'd go from my bottom to my top, and I'd be looking to take profit on the way up. I'd probably, because we are quite volatile, we've had this previous price action. For me personally, I'd try and be trading a little bit safer. But in a bull market, you should be bullish, right? So I'd be looking to take profit either here or here, which is the two Fibonacci retracement targets, or extension in this case. So as it plays out, we can see it runs perfectly to our 618. So we would have got profit here, and you can see others would have taken profit here by this, and then it reached our 618. So we got a perfect trade here based off the bull flag. So we got flagpole to flagpole. But you can also now see as this is forming, we've got potentially another flag happening here, right? So this could be making maybe another ascending or a rising wedge here before going again, which would mean that your flagpoles from here to here, and you'd be looking for a breakout, maybe up here somewhere at the 14K mark, however that plays out. Again, as this is the only price action we've got to work with right now, I'll just clean the chart up. So what I'd be looking at right now is we're back in the same situation again, right? We're in an ascending pattern. So I'd be looking to get a long entry in after we've confirmed maybe a little bit more personally. I wouldn't be looking to get in too early with this because of these downside wicks that I can see here. I mean, that's quite bearish in nature with the strong downside. So I'd be a little bit more careful on this one, but same applies. We'll still go for the Fibonacci to the top, and we'd be looking for taking profit up here somewhere and here somewhere based on this. You'd enter, once you've confirmed bullish through here, really, just because of these 2 weeks, I'd be looking for more of a safer entry. I may even wait for a retest just to protect my capital, right? So we'll just press play and see how this plays out. Same applies with that. If you entered in this range here, you'd have your stop loss out of the pattern, which invalidates it, or under the next level of support again, and then allow your trade to play. You can see here, you got very bullish, got a retest in. So what I would have done personally in this position, if I hadn't entered in here, I missed it because it got a front run by the looks of this because it was so bullish. After I seen this rejection candle here onto the downside, this is a very bullish candle, and it also closed above these 2 bearish wicks. I'd be looking to get long ASAP with a stop loss underneath this wick here, or underneath the actual pattern itself, which is like, yeah, pretty much the same. And then to the upside, right? And this is where we would have taken profit again. And you can see a lot of down pressure here in this region. A lot of people took profit here. And then you can see shortly after we found our top of that run. All right. And if you were trading these bull flags on the way up, you would have also had your order blocks in and watching as price creeped up. So you would have known once we got to the point where it started to get quite parabolic, that you should be looking to take profit in this particular range, which has multiple order blocks all in one. There's 3 different order blocks through this range here. So when we hit that range, after getting a disgusting candle like we saw in 2017, this candle, you know it's time to get out because we've smashed into an order block. The candles are massive in size. You know that the tops should be in. There's a blow-off top, right? So I hope that makes sense to you on how to trade bull flags. That's pretty much how you print money in a bull market. Very easy to do. Just requires to have disciplined stop losses and stick to them. Don't keep moving it up as price moves up. Just have it once it invalidates your pattern. So if you keep moving your stop loss up during this volatility, say for instance you're entered here, you're up maybe 20% because you're on high leverage, and you move your stop loss up and up, you might get stopped out as it gets a little bit volatile, but it still didn't actually invalidate your trade plan, which would have been if price came down to here. So you should allow your disciplined stop loss to just sit and wait, and then allow the trade to play out, which would have been, if you were trading how I trade, which you guys will see, this here was a 28.88% move, which is technically 2,800%. as long as you just allowed your stop loss to take place and you took profit at the order block, right? Which would also be a fib extension and also a pivot target. But we'll cover those as well. All right. Anything else, Cole?
Very nice. Yeah, flick it back to me and I'll go through a few more little things.
Sweet.
Cool. We're sort of starting to get into order blocks now, so we'll continue on those. All right, so here's an example. This is one of the ones that Troy just looked at as well. Actually, no, this is a smaller one. You can see the larger bull flag is actually just there, and this is what it looks like on the lower time frames in 5 minutes. So the funny thing is actually when we're looking at these larger time frame bull flags and stuff like that, we're looking at just on the 4 hours. So we've got this one here, obviously, which is really important, and this one here as well. On the lower time frames, you have all these little ones, right? So there's like one there, there's one here.
You're lagging a little bit there, dude.
Internet connection is unstable. Hopefully I'm back now. All right, you still got me?
All good, do so much better. All good.
All right, sweet. Temporary drop out of the internet, but we're back. So yeah, basically we have these bit larger time frame bull flags, right, which is this one here, but also what we can see is on the lower time frames, there's little bull flags in here as well. You can't actually go down onto the 5 minute and stuff like that because you can't go this far back, but we can sort of see the structure here and here. And then obviously like this one here as well, there's a little flag in there. And then up through here, you can sort of see there's another sort of shape in there as well before the blow off top. And there are smaller ones all throughout because each one of these candles is a 4 hour, right? So it's really important, especially when we're bullish, to understand how to draw these bull flags in because, yeah, they play out a lot. And it's very easy to make money off them, especially on the lower time frames as well. So, yeah, get used to trading those and learn how to trade them because they're probably the most profitable thing that you can trade in an uptrend because it just goes pump, bull flag, then it goes into a bigger bull flag and pumps really hard. So you can trade the bigger ones on one account and trade the smaller ones on a lower time frame account. And this is basically what it looks like on the lower time frame. So this is a symmetrical triangle. We have the 1, 2, 3, 4, 5 touches usually. This one actually doesn't come back for the 5th touch because everyone's front running the pattern, right? So what happens then is you either buy the breakout, buy the retest. You've got to make sure that your stop loss is below the support of the triangle because what happens a lot of the time, as we can see here, we actually have a really big Darth Maul, right, which is about a $300-400 Darth Maul that pumps up to here, wicks all the way back in, all the way down to this support level here. So this was obviously already pre-drawn before this started playing out when it was sort of back here, and I was expecting it to come back, tag and get in here perfectly. Stop losses below the 3 level, right, which is this point of support, because if we break down through that, I want to get out because it's probably not going to play it as a symmetrical triangle anymore. It's forming some other shape, and I want to reassess the trade from there. So that will be invalidation, right? So you've got to make sure you're clear because a lot of the time, especially when we're bullish, you will have these big wicks come back in and try and hunt people's stop losses. And it's basically the whales trying to accumulate and take people's stops out for liquidity. Could also be the exchange being a little bit dodgy as well. So just got to be aware of that and just make sure that you steer clear of those and have it below the next point of support, right? So obviously it comes back in, bounces off that, and then launches, and you guys know the rest. It goes another 3K higher or something like that, right? 2.5K higher, right? So Troy was taking us through before this top up here and how we could sort of see that coming in. So I'm going to show you just how to draw in our order blocks, right? So we've obviously got this one in here, which we can see how important that was because we came in, had a double bottom and bounced off that. And we also had another really nice long entry from this range through here as well, which we can take a quick look at shortly. So drawing in our order blocks, right? We're going to take this level through here, right? So I'm just taking this from the top of here of this doji to the bottom. So the top here of this doji to the top of this point here, because this is obviously a resistance level that gets put in, right? So we're going to take from resistance to resistance through here. And we're just taking this as an area of resistance through this range, right? So a little hack you can get in there and just go to the coordinates and just make that 500, and then I'll just drag it across the screen, right? So we're going to make this because it's resistance. We're going to make it into red, right? And then the next one up through here as well, we're going to take this block through here. It doesn't have a resistance level that's been tagged, but so it's unconfirmed level of resistance. But you know, looking at this, I think if you're going to have anywhere after you broke through this level here, originally it was this level here. I was like, okay, it's going to pump to this level here. Then once we broke through this level, I think there's no real other point in the market it's going to push to apart from this area, right? So I thought that was pretty obvious. So we're going to use our little hack. This is Troy 101. So then we just go 500, it drags across, right? And as you will see, we came up, we perfectly tagged this order block here, it was about 38, 39 level, right? So on the lower time frames, this is what it actually looked like, right? So it came up, obviously this is a bull flag in here, and it pumped through that, came back up. And you can see actually on this picture here, a lot of the times when we're really bullish, this will happen and you'll get a pump, right? You'll get one little dojis, which is pretty much like a 5-minute order block, right? Price will pump again, come back and support resistance flip off that level, and then push on again. And so it's just something to take notice of. Don't worry about it too much though. And then here, obviously pumped again. And then we have this inverse, sorry, not inverse, we have a head and shoulders pattern with a high here, a higher high, and then a lower high, right? And then we break through this level here, all right? And we actually make a lower low, right? And then that confirms the trend actually shifts. So on the lower time frames, right, we've got a bearish pattern, and that's pushing right into our order block, which I thought was going to be the top for a long time, right? The other thing as well to look at is our pivot levels, right? So we actually had a daily pivot which came right up into that level as well, which was our resistance 3. So you can see down here the pivot played out perfectly as support, right, for this rally. So this is a monthly pivot, which you'll find on the daily time frame. We had a double bottom off our monthly pivot right up and tagged the very top of resistance 3. So if you took that trade, it was a really nice 81%. But obviously, you probably going to take profit a few times through there. Right, but anyway, so we had this. So we had the head and shoulders, right, going into 2 really key levels. We also had a Fibonacci level from the entire move down, right? So I'll get rid of the pivot. If we just map this move, so what I'm going to do is I'm going to draw a Fibonacci level from the very peak here down to here. And if you don't understand Fibonacci and how to draw them, don't freak out, because we're going to have an entire topic on this just to show you guys that are a little bit more advanced, know how to use them. It's also the 0.618 all at this level. So for me, the 0.618 is definitely going to apply downward pressure. The order block is going to be probably the most key. And then obviously the pivot as well is going to be pretty important, as well as a point of resistance. So yeah, basically, obviously we come back up into there. And then the next couple of candles, we dropped about 15% in about 15 minutes. So this was probably one of the best trades of this year. Took profit right through this range. I sold about 50% of my stack on Binance and bought it back for about a 15% gain a couple of minutes later, which was pretty nice. I did actually try to market short this, but didn't get into the trade. I got locked out through overload, which I was pretty pissed about at the time. But I took profit on this trade on the way up. So you can't get them all. I did get a really nice short, basically short anyway, on selling the top and rebuying a couple of minutes later. So yeah, that's a little way that you can use order blocks to help you. Other way as well is also for entries. Obviously, we have our double bottoms through here. So when I get pin reversals, right, so nice pin reversal here, perfectly close on order block, nice pin reversal here on the daily as well, inside the order block. And we've got another one here, pin reversal candle inside the order block again. Right, another example of order blocks doing their magic is literally just today or overnight. So these, clean up the chart a little bit. All right, so we've got this order block, obviously, from this guy here. So you see we're taking this doji here, right, and touching the top of the candles here and drag that across. Right, a really good hack if you're struggling to draw order blocks, because I know some people do really struggle to identify where they should be putting them. Go onto the line chart, which is just go up here where it says candles and go to your line chart. And you can actually see these small little movement areas where it comes back down and bounces out of it. So we're taking the low here, right? This point here, so we're taking the low when it comes down and makes a low, right? And we're gonna take the top here and put it to the top there, right? Take the low of this candle here. And we're gonna take the rest of the doji, right? And then the same here. So we've got so you see the line chart, it comes down and it bounces off quite aggressively. So we're taking the peak here and the peak here and then drag that across, right? So you can always double check if you need to the key areas in the chart using the line chart peaks and obviously lows as well. And also those indecision parts where the market comes down, moves sideways for a little bit, and they're going to be basically your order block. So what an order block realistically is, it's like this. So for example, on a lower time frame, it might take 24 hours, right? Or a whole week. Let's say this is 7 days, right? And then on the higher time frames, what happens is, sorry, on the lower time frames, what happens is it comes in and it's going to bounce around inside this. We're going to have all this, maybe a few quick wicks set in and out the top, right? And we're going to get a lot of trading happening in this range, right? So what we're actually doing with the order block is we're taking all of this, the key information having the key level, right? And we're compacting that into this one spot here, and we're going to take that as a key level in the chart, right? They call them order blocks or institutional order blocks because that's where you get trained at the key points of resistance in the market, and generally that's where you're going to have a lot of institutional order flow, right? So we can actually see that playing out pretty perfectly down here. So if I come back down, we have a look at the hourly, right? We've got our flag which is starting to play out pretty nicely. This comes down almost perfectly and tags the bottom of our order block. I'll look a bit better on my chart actually. Let's go have a look. Right, so you see my order block's not perfectly in line, right? So we're gonna make sure we're drawing these guys properly. Sometimes we get a little bit out of alignment. So yeah, make sure, so we're gonna have the top of the block here, right to the top here. And we can come across and we see that actually tags this level here pretty much perfectly to the dollar, right? So I think it's about $4 off. So obviously you get a lot of buy pressure coming in at these levels. So yeah, obviously it worked on the upside when we're going up, picked it almost exactly to the perfect point as well, and then obviously coming back down here. So this was a really nice long, a couple of this Discord got in here after it tagged this level and started bouncing up. So yeah, it was a pretty nice little 3% trade just from knowing where the bottom of the order block is. So for me, this is a really key area in the market, and I'm looking for a reversal off this level just because this is a pretty key area of this high here, right? On the daily and the weekly. So really do want to see the market start to reverse here. I think if we go much lower, the next level that you don't really want to see it falling below is probably through this level here, right? You've got support here, support here. So yeah, when it comes to resistance here and resistance here, so obviously that flips into support. So this is probably an area for bulls to make a last stand, and then I would say definitely this is an area right here for the very, very last stand at about 6,700. You don't want to see price go below there, but I would not be surprised if this order block here holds the support. Maybe we go sideways or something like that, and then bounce out of there and get some more bullish action back into the market, just the same way as we saw our order block up here, put us in for the top with our blow off top. So yeah, order blocks are really important to know, and you can use them as support and resistance flips and everything like that as well. They're pretty important. Another thing as well to take notice of is on the daily, we're actually putting in another bull div here. So if this closes green, we've had our first bullish divergence here. Our second bullish divergence is going to come up here. If this, once this flips back to green, if we go up another dollar or two, this will pop up and it'll show a bull div on our RSI indicator, right? And typically what I find is when the market bounces like this, we go quite oversold, right? Which doesn't happen very often on the daily. Last time we were oversold on the daily was down here when we formed our bottom. We had a couple of bull divs and the market took off, and that was a reversal, right? Typically bottoms take a lot longer to form than tops do, right? Because the way that the human mind works, you're a lot more fearful when you're at the top, so you generally have blow-off tops. Bottoms take a little bit more time because you need to have that sense of security and confidence come back into the market, right? So as you can see, we're flipped green again on this daily, only just, and the bull div popped back up down here, right? So There it is, back again. So yeah, if this closes a green day, we could have what we start to see a pin reversal candle or a possible morning star reversal start to show up, which would obviously give us a really nice bullish entry to take. So yeah, watching to see how that plays out for tomorrow. So anything else you want to add for those, Troy?
That's pretty much it. That's just to know how to draw them. Once they come back up or retest it, that's usually the confirmation of that it is an order block as well.
Yeah, I'll show you guys as well also another little thing, because obviously the weekly time frame is the most important. So you want to map the weekly time frames order blocks out, but then also take a look at the dailies as well, because you can get some pretty good daily ones in. So let's just say, for example, we're having this going on, right? So we have this big parabolic blow off top, right? The first area when you start, okay, we're coming back down from this 3,900 level. The first area that you're going to be looking for some form of support is going to be this daily order block through here, right? So, we put that in, drag that across, and that's going to be a level of support through here, right? And let's just see and watch how this plays out. All right, perfect tag at the bottom of the daily order block right through here. Mix that up, it tagged exactly the bottom of the level, right? So, you can see how well these work out and how much insight they can give you into trades, but it sometimes doesn't always tag the bottom of the level. Obviously, we had, two perfect versions of it here, and obviously the weekly that we just tagged just then. Sorry, in real time then, not in the replay then. It tags perfectly, but it doesn't always. Sometimes it just comes into this area and then gets rejected out of it. So I'm not gonna wait for exact perfect tag of it. If it comes into this area, I want to be getting long, and it's for a high time frame move, right? And obviously, it comes back into this area again, right? Almost perfect touch. That's your opportunity to get in into the daily for a really good trade, right? Go across, it sort of comes back in. I think here we get a touch at the top of it. And then, yeah, obviously this is a weekly one. The weekly one sort of goes through here like this as well, right? Which is something else to take notice of. So when you have two really strong order blocks, you have the weekly and the daily like that. Obviously, we've got a couple of really nice trades out of this level. And then obviously it fails eventually. And then, yeah. So the other one to look for as well is, Troy sort of showed us that earlier, actually. I'll show you guys through here like this. Right, so when we're looking at the market and it's super bullish like this, for example, and we're having this huge rally, the first area that you're going to look for is pretty much exactly the same. So this is quite similar. We pumped, had a bull flag, pumped, had a bull flag, had that one little indecision, and then rallied really hard. It's almost exactly the same as the top that we just saw on the daily time frame. So okay, so what's going to happen? What area is it going to look? What area we're going to look at? For a bounce, right? And obviously, the first area of support is going to be this level 3 here, right? So we're going to take our weekly order block, right? And we just watch how price reacts every time it comes down into the area. Obviously, it's acts as support. And you can see here, once again, it comes down to the weekly order block and gives a perfect tag of that level. So pretty much, there's 3 examples where the order block gives you the exact perfect, almost to the dollar entry. So yeah, there's a little bit of magic to them. A lot of people do use them that have a lot of capital, right? So it's not really something that most younger and inexperienced traders, if I can spit that out, getting a bit late over here in the US, but it's a lot of, not very many inexperienced traders know how to use order blocks and can use them on the chart. But the traders that do use these are the traders that trade a lot of size, and they're trading the high time frames, and they're waiting for this for a couple of weeks to come in, and they've got the orders set there, right? So yeah, there's the people who have the power in their game definitely are using order blocks on their charts. And so you can see how every time it comes into this range, it rejects that, right? So Troy sort of went over that before. We don't need to cover that off again, but you can see how powerful that is. And as soon as we lose that level. So yeah, very similar to over here. We're sort of running out of time. There's only a couple of minutes left for the session. So let's keep moving. Troy, do you want to do bump and runs? I mean, we sort of went over broad and descending wedges. I might just quickly cover this on off so we can keep moving. But
yeah, sure.
Bump and run. This is a really good example of a bump and run through here, right? So we sort of have this falling wedge sort of set up It actually might be a little bit better on the daily. So sort of have this falling wedge type setup through here, right? And it fell out of the bottom of the falling wedge. So we have our falling wedge, right? Falls out of the bottom of our falling wedge. So this is the bump. It pushes it down, right? Pushes it down outside of the pattern, right? And we go along. It finds resistance at the bottom of the pattern, which is pretty interesting, right? And then we finally break into the pattern. So the way you want to trade these, right, is once you get back inside the pattern, so right, we're break down, bumps down outside of the pattern, right? And then what you want to be doing is once we get back inside the pattern, right, it's the same as how you trade trading ranges, right? So trading ranges, you trade them like this, right? Goes around, sometimes you get the wick off spring. You want to get back into the trade once it reclaims the trading range, right? We can do something like that, right? Not just blow straight through. But basically when you're trading these, right, you don't want to be trying to get long down here, catch the knife. You want to wait for it to come back into the trading range, get into here, and then play it to the upside from there. So same with our bump and runs, right? When we're getting into the market when it comes back. So you can see it actually has a bullet breaks in quite convincingly, has a bullish retest. So you want to be getting in this stage here. Gave you a fair amount of time before it broke out to the other side. And as you can see, it finally had a little bit of a push through, right? Went sideways for a little bit and then completely launched. So there's a lot of confluence factors through this level here. There's also a bit of a wick off trading range as well. That's any triangle and also that bump and run sort of action. So yeah, it's just to be good to be aware of all the different factors at play. So Troy, you're sort of the master of playing these. Any more that you want to show?
It's pretty much you have like a wedge or a channel that's playing out, being respected, and then you get the moment of a period of time where it's outside of the channel temporarily before it launches back into it. And pretty much what that is it's liquidity. So anyone who is trading the pattern or the channel, when it goes out of that and validates their trade, and they usually sell, which causes massive volume, exactly where the institutional traders with big money want your Bitcoin. So if you look at the volume actually in Kyle's screen at the moment, you can see when it retested after falling out, the volume was massive, actually greater than when it capitulated. So once it broke that trend and then went for this bump and run pattern, we didn't know it was going to be a bump and run, but that's where liquidity is. So if you are bullish and ultimately trend is still to the upside on Bitcoin because it's been trending up since its inception, that would have been your greatest point to buy, right? So if you're looking to trade bump and runs, once it gets back into the channel or the pattern, that's when you're looking for a long entry to the upside or a short entry to the downside.
That's right.
If you look, so you go.
You keep going.
Cool. Yeah. So if we look at, we want to just go to the 2017 run to the top. That was also a bump and run, which is also the broadening ascending wedge.
2017, yep.
Yeah, both of them. So what happens is it creates the broadening ascending wedge, right? And you've all seen this, it goes on the ascending pattern. But the last pump usually breaks the pattern and goes to the upside. And that's usually the point of the highest liquidity.
Can't even draw it in.
It might look a bit better. Yeah, it might look better on log scale.
Yeah, I think
the linear scale is not too kind about that. But that's the greatest point of volatility, right? That's the greatest point of volume. And that's usually where you get your FOMO buyers or your FUD sellers. And you can see it worked twice in 1 year from 17 to 18 from both the top and the bottom. Then when it got above that point, price went manic, the volume went manic, and then the top was found. And then to the downside, the same thing happened. Right? The price tried to drop, it didn't drop too much, but the volume was massive. The ceiling underneath that in the bump part, the bump, was so great. And that's where the institutional buyers still up. So when we were back down there, we were printing that ascending triangle on the 2018 bottom. The bump and run was playing out, and we could see that happening, which is also part of wick-off, which we'll cover as well. This is how institutional money get back in the game. This is their reaccumulation period. So how do you create a lot of volume where you fill your bags? You break trend. momentarily before shooting it in the other direction, which is exactly what we can see is played out here. And it just plays out time and time again, which is why the broadening ascending wedge and descending wedge, the ones I never shut up about, is my favourite patterns, because it is the entire market structure. It is Elliott waves. It is the free bullish drive. It's all these patterns. They've all got different names, but ultimately it's the same thing. So if you can understand how to trade these, which is what you guys would have seen on Tuesday night when I traded those, or yesterday, just how easy they can be to trade once you get that retest. Yeah, that's pretty much the bump and run. It's just basic Elliott waves, really. You get a nice bit of a blow off top, or you get a bit of a capitulation bottom. And when it breaks that trend, it's the highest point of liquidity usually. And then, yeah, pretty much. Just wait till it gets back in the channel.
Very good, very good. All right, so yeah, like Troy was saying before, there's always patterns inside patterns. This is parabolic advance, right? So we don't really need to cover off this too much, but it's just important to understand, a broadening descending or broadening ascending wedge sort of creates this pattern a little bit as well. But you basically have the base 1, 2, 3, 4, which is just a whole heap of bull flags going up. So it's like pump, bull flag, etc. The parabola, but don't take too much attention to the parabolic advances, because you can basically just draw those however you want on the chart and make it fit, right? So wouldn't pay too much attention to those. They're not really a good way or method of trading the market. This is good to understand how basically markets work. So you have the pumps, right? And then you have the really big, the last two pumps are usually the biggest, and you have the big blow off top that breaks the trend line, and then you start to trend back down, right? All right, so we'll flick through this because we'll come back to finish off basic strategy over the next couple of sessions, so through next week. But basically, we've gone through basic market structure, we've gone through trend lines, we've gone through horizontal support and resistance, we've gone through basic patterns. We're going to take you guys through RSI, bullish and bearish divergences. We've sort of touched on it a little bit just before, and then obviously we've also just talked about institutional order blocks as well, right, which we just showed you just before, right? So, we're almost taking you guys through the whole of our first strategy, which is the basic strategy. It's really important to understand and how to trade this, because this will give you a shitload of trade setups you can be quite profitable from. And you can trade these on higher time frames especially, but also when the market's bullish, it actually moves in quite in a lot of basic structure patterns, right? So we have descending triangle you see, and this is Ethereum. This is a couple of months ago. We're back at around the 200 range, right? So Ethereum descending triangle, and then it obviously breaks down, flips into a inverse head and shoulders, right? So we obviously got short here. This broke down. Once I saw the inverse head and shoulders and the right shoulder start to hold, took profit from the short up here, flipped into a long, and this ended up rallying, right? And a lot of the time when the market is bullish, it will just go from one pattern to another and just keep playing out like this. And typically ETH/USD and BTC/USD as well do this. Not so much altcoins, but when we're bearish, what happens? The market chops around all over the place, and it looks pretty gross. You don't really get many of these on the lower time frames, but you still will get patterns on the higher time frames, even when the market is bearish. All right, we probably don't have time to go through general failure patterns, so we'll cover it off in the next session. But general failure pattern is basically when we're looking for inverse head and shoulders or something like that. There's a really good one in this area here, actually. We'll take a quick look at it. Right, so we understand how to play these to the upside, but when they do actually play out, right? So we looked at inverse head and shoulders before, right? So this is obviously inverse head and shoulders that fails, right? So we've got our neckline sort of through here, right? So you could sort of see like, okay, this is going to play out, right? So we break the neckline through there. A lot of the time I like to see it break the high of the left shoulder, right? Which is where you're going to see most people get sucked into the market, right? So this is a really good example of a swing failure pattern and a really perfect point to stitch a lot of traders up. So people who are overly bullish, which is usually me, too much on Bitcoin, that's for sure, right? This is a perfect place to stitch a lot of traders up. So we've got the inverse head and shoulders, right? And then obviously we have the swing failure pattern that gets put in. So when you're looking for a pattern to fail like this, for example, look for a spot in the market where, obviously we've got a really strong downtrend. and it could be an area where we could continue the downtrend and just trap a lot of traders, right? So just be aware of that. Spots in the market where there could be a bit of a stitch up, and typically it's where you have a downtrend, then you put in a bit of a higher low. This is a bit of an ugly low. Like, this is still sort of a bit of a rally. I don't know if that's a full swing, right? It sort of is, but so it's not really looking that amazing anyway. And on lower time frames, this actually looked disgusting all the way through here when I was just trying to grind up, and that broke the neckline, didn't really get that much of a rally. Got a small rally here, put in the swing failure pattern and just wrecked everybody. So when you're trading these, obviously you want to trade the swing failure pattern. You're probably getting on a lower time frame on the 1 hour, right? So you trade the SFP, right? And then your first target is the distance to the point of vulnerability. So the point of vulnerability is the left shoulder, right, which is this level here, right? So you're targeting from here down to here, right? And that is your point of vulnerability, and then we'll just take that as the target, right? So your first target will be here, and then like a measured move, your second target is down here, right? And you see we come down, and eventually we do take that out, right? But what you want to be thinking about is the theory of the hot potato, right? You want to take money off the market participants quickly, right? You're trading against, so you want to get into the market through here, right? Play this and get out at this level here, right? Definitely be taking some profit there. And the next one, you'll be taking profit down here if it gets down there, right? Also be aware of other things as well, like your order blocks and stuff like that as well. So it's just important to understand where the other market participants are going to have a lot of their stop losses. And then we're going to have that as an area that we're going to be hunting to take out. And obviously, if you did take profit this level here, you have a bearish retest of that level as well, right? It comes back and retags that level here, which is a perfect bearish retest. So you can actually get in back at the same level that you got out. So don't be too afraid to take profit, because we usually do get other opportunities at those key levels. All right. So, other points to look for, obviously, look for an SFP at the neckline or a break of the trend and then a reclaim of that level. And so we'll go through a couple more of these a little bit later, but we're running out of time. So we'll just touch on this at the start of next week's session 1. But what you're looking, and we'll go through how to spot these a little bit further as well when we're looking further into how to trade horizontal levels and swing failure patterns. And we'll look at double closes and all that sort of thing, rounded retests as well. But that's what we're generally looking for. You're looking for those rounded retests on the shapes of the pattern. So, the way that the pattern should break out, obviously, you suck a lot of people in that direction, and then, you get back inside the pattern, the retest level, and then fails, right? So, just be aware of those so you're not getting wrecked. And if you do happen to be getting taken out on too many of those pattern failures, for example, make sure you're taking notes of it and learn how to trade against the way that you're losing money, because that'll be a profitable trade, right? So we'll go further into that a little bit later on in the course as well, when we're going into trade journaling and stuff like that. All right, so the other thing to look for as well is to look for the point of vulnerability. It's going to be your target, so it's the area where people will be putting their stop losses if they're trading the pattern as it normally should be traded. All right, so the last point is the homework. So what we want to see you guys do is find and structure trades on. So structuring your trade is your entry, your stop loss, and your take profit, right? So we're going to do 2 bull flags, an inverse head and shoulders, 1 cup and handle. We didn't really cover a cup and handles, but we can go through those. Maybe don't worry about the cup and handle. We'll delete that. We'll do a double bottom, double top, and then we'll do 1 general pattern failure. So you guys can take that inverse head and shoulders if you want to. They got rejected, and then put in add your weekly order blocks. All right, we're going to take a screenshot of that again, Troy, and post it up in the group.
Just done. Cool.
That's pretty much it, guys, for session 2, week 1. Really, really happy with how everything's going. Hopefully you guys are getting a lot of value out of it, and you got a whole heap of massive value again tonight. And we will see you all next week.
Can I steal the screen for 2 seconds?
Yeah, too easy. All right, I'll stop.
I'm going to show you all something that might scare the shit out of you. So you should probably be paying attention to. I'm just looking at the screen now while Kyle was talking and zoomed out a wee bit. Can you see the screen at the moment, Kyle?
Yep.
Cool. So I'm just looking at this, right? I'll just go to a bigger time frame so it doesn't look so whatever-ish. But this is what we're talking about, are patterns right now. This is potentially, even though it's quite ugly, a head and shoulder pattern.
For sure.
Right? Which means the target, as disgusting and dirty as that is down here. Doesn't mean we'll hit that, guys. But what you'll be looking to do from this point on, just a quick trade watch for this week or over the weekend or however this plays out, is you'll be looking to short once you get a bearish pattern along this trend line. You clean it up a bit, obviously, but that's one trade you could look to take a short here because that looks very deadly, right? I'm not going to try and say still do your stacks and we're going to die, but never neglect the big patterns, and that is a big pattern.
Definitely.
Right.
And then watch for the pattern to fail as well if we get above that.
That's exactly right. And we reclaim this and go back up, then it's on, man. It should be looking pretty good. Definitely. But right now, that's pretty scary. All good. All right, I'll stop now.
Too easy. Any major questions before we move on, guys? Where would you have exited the head and shoulders failure? So we covered that off anyway. Slowly making sense. Very nice, Nathan. All right. Nightmares to finish. Great. Good to leave you guys with some good info and feeling warm and fuzzy about life. All right. Looking forward to seeing everybody's homework in the Discord group. We'll chat to you all next week. See you guys on Tuesday.